Imagine being at a pivotal moment in history where individuals have the opportunity to significantly increase their wealth, not through chance or games of luck, but by recognizing a transformative shift that occurs only once in a generation. In previous instances, individuals in various professions who invested in emerging technologies saw significant financial rewards. Taxi drivers who embraced internet stocks found themselves retiring ahead of schedule. Teachers who recognized the potential of search engines achieved financial independence, and factory workers who placed their trust in smartphones transformed their family legacies for generations to come. The trend is re-emerging, and this iteration is more significant. However, the reality is that many individuals may not identify this opportunity until it has already passed them by. That's the typical approach. The inquiry at hand is whether you will be the individual dismissing the situation lightly, or the one taking proactive steps in preparation before the broader community becomes aware. While history may not replicate itself exactly, it often echoes similar themes and patterns. Consider the significant growth periods of the railroad industry in the 1800s, the oil boom in the early 1900s, the rise of the internet in the 1990s, and the emergence of smartphones in the 2000s. In each instance, there existed a brief opportunity for those with foresight, or even ordinary individuals who remained observant, to strategically place themselves ahead of the trend before it became apparent to the masses. Individuals who overlooked this reality ultimately found themselves in positions serving those who recognized its importance. Today, the focus is on artificial intelligence. It has transitioned from the realm of science fiction into reality. It holds the same level of significance as electricity did during Edison's era. Many individuals perceive AI merely as chatbots composing poetry or applications that enhance images. That represents the initial layer. The underlying reality is that AI is increasingly serving as the unseen foundation across various sectors, including business, healthcare, finance, education, and government policy. Just as every company today relies on electricity and the internet for its operations, it is likely that in the near future, no serious business will be able to thrive without integrating AI into its processes. Whenever an area is designated as infrastructure, significant wealth is generated for those who provide the essential components. Many are familiar with prominent companies such as Microsoft, Google, or Nvidia. When the media is buzzing about an opportunity, it's likely that the most favorable returns have already been realized. Wise investors avoid the limelight. They instead track the subtle movements of capital in less obvious areas. Here are several overlooked aspects that many individuals tend to overlook. But before that, please subscribe to our channel and also press the like button to know more financial tips. Number 1. Cybersecurity for AI. Each new tool introduces potential risks that must be managed effectively. Organizations developing security systems tailored for AI will play a crucial role in safeguarding the digital economy. Number 2. Healthcare automation encompasses advancements such as AI in radiology, robotic-assisted surgeries, and innovations in drug discovery. The next major player in the pharmaceutical industry could emerge from this promising frontier. Number 3. Rare earth minerals and robotics. The demand for AI necessitates robust hardware solutions. This indicates the supply chains for lithium, cobalt, and rare earth elements. Companies that excel in these materials are poised to become the leading figures in the industry of the future. Number 4. Logistics and supply chains. Consider the impact of AI on ports, warehouses, and shipping routes. The foundation of international commerce is undergoing a transformation driven by advanced insights and other tariff restrictions. Number 5. AI education platforms. A significant number of individuals will require re-skilling. Platforms that focus on teaching skills related to artificial intelligence are emerging as the modern equivalent of traditional universities. This race is characterized by its global nature, setting it apart from the dot-com boom. Countries such as the United States of America, China are making strategic investments in AI service hubs. Singapore is providing support for AI-driven financial initiatives. The Middle East is developing AI cities powered by affordable energy sources. Even smaller countries rich in hydro or geothermal energy are positioning themselves as ideal locations for data centers. This indicates that investors should consider a broader range of options beyond U.S. stocks. ETFs and global funds are providing opportunities for everyone to engage in the market. It's time to take a practical approach. What strategies can an individual lacking coding expertise, industry connections, or substantial financial resources employ to enhance their position? Rule 1. Consider the foundational elements, not solely the applications. We must recognize that the individuals who amassed wealth during the California gold rush extended beyond just those who worked as miners. It was the vendors of shovels, jeans, and tools. In the realm of artificial intelligence, the essential resources include chips, storage solutions, power infrastructure, rare minerals, and robust security measures. Focus on the underlying value of the ecosystem rather than getting swept up in the excitement. Rule 2. Ensure a broad distribution across various layers. Diversifying your investments is crucial. Avoid concentrating solely on one AI stock. Diversified across various functions, creators, facilitators, foundational support, guardians. In this manner, regardless of the outcome of the AI competition, you will be strategically positioned. Rule 3. Achieve a harmonious blend of active and passive investment strategies. For a straightforward investment approach, consider selecting ETFs or index funds that encompass a range of AI-related companies. For those seeking greater potential returns, consider exploring some niche players in the market. Combining both strategies can provide a balanced foundation for stability and growth. Rule 4. Pay attention to the subtle movements of capital. When media headlines begin to highlight a stock, it's often the case that larger investors have already taken their profits. It's important to monitor construction projects, government contracts, and any notable surges in venture funding. Subtle shifts in financial activity often indicate the upcoming significant trends. Rule 5. Implement the 10% guideline. It's crucial to avoid risking your entire investment strategy on one particular trend. While AI presents significant potential, it also carries inherent risks. It's advisable to maintain your exposure within the range of 10 to 15% of your overall investment portfolio. This approach ensures your security, even in times of market fluctuations. Rule 6. Allocate resources to education with the same commitment as you do to stocks. One of the most secure investments in AI extends beyond finances. It encompasses personal aspects as well. Invest both your time and financial resources in acquiring knowledge about AI tools. Leveraging AI in your business or career has the potential to significantly enhance your income more rapidly than traditional investment strategies. Rule 7. Adopt a global perspective, rather than a local one. It's important to look beyond the U.S. market. The expansion of AI is occurring on a worldwide scale. Countries that offer affordable energy, robust internet infrastructure, or a substantial pool of technical talent are poised for rapid growth. ETFs focused on Asia, Europe, and emerging markets have the potential to deliver superior performance compared to most giants in certain sectors. Rule 8. Consistently protect against potential losses. During periods of significant change, certain companies are likely to experience dramatic failures. Consider diversifying your investments by incorporating more stable options such as bonds, dividend-paying stocks, or real estate alongside your AI-related ventures. This approach ensures that even if a segment of your investments experiences significant fluctuations, your overall financial stability is maintained. But you must do your own research before investing, as this video is for educational purposes only and we do not recommend you any investments. Now, do watch the video appearing on the right side to know how you could get rich without anyone knowing. Also, subscribe to our channel to help us complete our goal of 10,000 subscribers.